What's up, friends? Happy Monday. It's your boy GP coming to you live with DeOrganized Media, bringing you another episode of DeOrganized Nightly, where we get your favorite gigabrain astronaut scholars in the same room, kick out some high-frequency vibes, and have some dope conversations. It has been an eventful day today, with X being under attack from some sort of entity and being pretty glitchy today. We had some technical difficulties this morning trying to do find or earn, and now it's looking like we might be running into some issues having the live stream play on X. So we're probably going to go over some of these different segments, these different notes that I took in my bookmarks, and then bring on our friends and try to troubleshoot a little bit. Let's see what we got here as far as just in Michael Saylor's strategy to raise up to $21 billion to purchase more Bitcoin. Very, very convenient, seeing as price action is down. The crypto fear and greed index has dropped to 17, indicating extreme fear in the market. It sounds about right. The Cayman Islands now requires crypto custody and trading companies to obtain licenses under new regulations effective from April 1st, 2025. You can thank Hawk Tua Girl for ruining the fun in the Cayman Islands, that is. While some countries have explored the idea of state-backed stablecoins, real-world examples remain rare. Turns out Kyrgyzstan is launching its own USDKG official token. That's cool. Probably going to see more and more nations developing their own stables following in suit. FIFA is now considering launching its own token. President Gianni Infantino announced the initiative at the White House crypto summit, with Donald Trump supporting the idea, stating that the FIFA coin could eventually be worth more than FIFA itself, which is wild to think about. What other big gaming associations are going to be getting into making their own cryptos? Who knows? The U.S. stock market took a sharp downturn today. Apple down 5.65%, Microsoft down 3.33%, Nvidia down 5.15%. Just red across the board. And then analytics platform Arkham has introduced a key opinion leader tag for blockchain addresses of prominent individuals. Over 1,000 addresses are already labeled, including those of Vitalik, Justin Sun, Arthur Hayes, and Donald Trump. These guys at Arkham, I like their work, doing the different bounties for information for sleuths to go out there and, help them get this information. I do like their platform, and they are making the whole space a little bit more transparent. Today X was hacked, and Elon says the IP addresses connected to the cyber attack on X today originated in the Ukraine area.
We're not sure exactly.
There was a cyber attack on X today, which shut it down and may have been foreign sourced.
Yes.
It's a big story. You want to give us a moment on that?
Well, we're not sure exactly what happened, but there was a massive cyber attack to try to bring down the X system with IP addresses originating in the Ukraine area.
There was this
wild stuff. Stacks 2025 and beyond. Key efforts happening to grow Stacks. Join Stacks founder Munib, Bitcoin L2 Labs, and Stacks Asia, all in an AMA this coming Thursday on March 13th. Breaking. Trump's crypto portfolio is down 300 million in 4 weeks. He is one of us. Is Trump a degen? Want to know what his risk tolerance is. But anyways, I've got a couple friends in the house. Let's bring on our friends. We've got Shiflet in the house tonight, along with our beloved Peace Love Music in the house. What's up, fellas? How are we doing tonight?
What's up, brothers? How are you? I'm doing good, man.
Yeah,
doing good. Despite all the gloom, right? With the stream's not on. Apparently, the stream's not streaming on X. So to those, actually, I got 5 people are tuned in on X.
Okay,
but I can't get it to run. It keeps dying, or it's not showing. I just shared out the YouTube feed. It is live on YouTube. You guys can definitely watch it on YouTube too. Actually, it would be a big help for us to get some more viewership on the YouTube channel.
Yeah, I agree.
While X is fumbling.
Yeah, dude. X has been just a pile of hot garbage today, but I guess we can't be mad at them since they are they are under attack. So there is that.
To be honest with you, I kind of see it as we're under attack.
Look at that, dude. They're messing our stuff up, man. Like, this is what did we do to you guys, right? We didn't imply any tariffs or
how we communicate, share information, and communicate it with each other just directly is all on X, and it's all kind of messed up right now.
Look at that, dude. Hard times, hard markets. What are we gonna do? Shiflet, what's up, man? How are we doing tonight?
Hey, doing good. I liked that mention of Trump being down 300 million. The man's been down 900 million before. And there's a quote of him walking down the street, and he was like, yeah, that homeless guy right there, he's $900 million richer than me because he has nothing to my name, but I'm in the whole 900 mil. So it's all about perspective. You could be down, but someone might be down more.
Very true. He's got different things that he's making shake, man. So, he's got some debt. Yeah. And that homeless guy, he might not have as much debt as him. So is Trump a degen, Shiflet?
I think so.
No, I don't.
I think so. Like it takes a degen mindset in order to consider this market. You like the more you study this market, the more that you understand that it's less degen than
I
everyone
think he
thinks.
has.
But it's hard to go back to traditional finance
I think he has some
afterwards.
degen advisors, but I'm not sure Trump's officially a degen. Well, I mean, I guess is it just the idea that he'll take risks, buy into something that he doesn't know anything about, or like what's the degen behavior that Trump is actually?
So I was referring to his risk tolerance. So like the fact that he's willing to take these risks and hire the experts that know about this space.
Yeah,
Because the
definitely.
stuff he used to do in real estate, he would give presentations where he had no money to his name and he was just making the deal to
Manifest the money.
get some cash and flow.
Yeah, and that's. I mean, that's part of it. Part of it is just knowing how to put sides together. You know, but that's I don't know if that's necessarily degen, but it's definitely like deep cred, right? You know, the guy's done it
Yeah.
for sure. You know, I mean, they had the whole Justice Department against him, and he got out of it. So I don't. I mean, how do you? Where does it go from here, right?
Yeah, dude.
No, it's gonna be good.
It's been a crazy eventful Monday to say the least, boys. You know, I think that having the stream kind of axed as soon as we get it started is a bummer. You know, but you know we keep on keeping on, right? I think that the White House Crypto Summit was it's just very convenient how we had this White House Crypto Summit and then now we're seeing lower lows and price dumping and all over, you know, TradFi, Bitcoin, everything. Do you think that maybe there's some correlation there?
Absolutely, yeah. Between TradFi and people's risk tolerance is going down, so they're getting out of assets that are deemed speculative and chasing less volatile assets in order to try to retain their value.
It's reasonable after all the. I mean, there's been a lot of there's been a number of, I wouldn't say black swan events, but there have been a lot of hits to the market. You know, there have been a lot of hits that shake confidence, both in crypto and, you know, just broadly.
I have a video from our very talented brother in art, 300, that he is really getting good at his edits. I wanted to play this video that he made earlier.
Is this the one with Mr. Krabs?
This is the one with blood in the market.
Oh, I didn't see this one.
Yeah, this one's good, dude.
It's all fine. Don't worry about it.
Da, 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 da. $300, that one bull that you just cannot break. Brother is taking advantage of these moments. We're seeing stacks up like 59 cents. It keeps making lower lows, and my brother is still bullish. Let's go.
The fundamentals only increase and then the price decreases. So it's like the inverse can only last so long. It's not the first time I've said that. I know it keeps decreasing, but you can't ignore the fact that it's still, the fundamentals are only getting better. And then as soon as we get another SBTC cap raise, if we go above 4,900, that means we have more
The
Bitcoin.
next step
than
is actually just the caps open. So there's, and withdrawals are open. The next step is to open up withdrawals, and then there will be no cap.
People can peg in and peg out as they please. Yeah, Michael would like that sentence.
He would definitely have like.
He would have made a joke.
I wouldn't be surprised if his radar goes off. He picks up the laser beam and
the autism laser beams start going off, and he's like, "Somebody said the word peg." And he comes in.
Like, somebody say something about pegging in.
Did you guys mention my name? And then he tunes in. Anyways, yeah, it's here's a question piece. Like, whenever this happens with our podcast, X does its thing. Do we try to restream an episode, or do we roll with the punches and just keep streaming?
Well, the stream's going. It's going. The stream's on. I don't think the problem is restream. Like, it's up to you if you don't want to keep doing the show. If you want to cut it short, since we really don't have the viewership, that's up to you. There's like 12 people watching, and I don't even know if it's we don't have any chat. I don't know if anyone can even access the live chat. I don't know if the people that are viewing it actually are seeing it, or if they just like clicked on it and have it open.
Do we give it a college try and then try to?
How about this? Anyone that's watching right now, if you are interested on whatever medium you're watching it on, if you want us to keep actually going with this show tonight, say something in the live chat if you can.
Yeah, that's a good way to do it. Gauge if it's.
We'll give it a few minutes. I mean, It's up to you. It seems like we do the show all the time. So it's having a night off or a short night wouldn't hurt.
Yeah, we could.
Honestly, man, it's your call. Like, if you want, I'll go until 8 if you want, or we can cut it short, whatever you want to do.
Yeah, we can go. I figure what we could do is like Shiflet put me onto a video that I wanted to watch. We
might as well do that because it's topical today, and the news cycle goes so fast. It's probably just as familiar, and it's still going to be on YouTube, and we can still, Hannah still might make some shorts out of it and stuff. So we'll still have some content. Might as well go through that.
Yeah, solid. Then we'll just do that. We'll play that video, and then have some some takes on it, and then we'll roll from there. And yeah, isn't a bad day to just have like a brief episode, touch bases with everybody, let them know that hey, we're here, we're still grinding away. So it was Anthony Pobliano. This guy here, he had a take that my boy Shiflet really liked. Maybe we could take a look at that really quickly. Let me get that pulled up. We'll listen to what this guy has to say. We'll pull him up. So from the desk of Anthony Pompliano, Trump is intentionally crashing the economy, Bitcoin fear and greed, stock market to trade 24/7. Enjoy. All right, so let's run this video and see what Anthony Pompliano has to say.
On everyone, we've got a ton to talk about today. Is Donald Trump crashing the market on purpose? Is the fear and greed index swinging too violently? And is 24/7 trading coming to the stock market? That and much more today. We're live from the desk of Anthony Pompliano. The big question in financial markets over the last 2 weeks has been, is Donald Trump the president of the United States? Is he intentionally trying to tank the U.S. stock market? That'd be insane. That would have been an absurd question back before the inauguration. Now, the general thought process is that President Trump, he's a businessman, and he's also an investor. He measures the health of the U.S. economy through the stock market performance, and so you should expect that the stock market will go up and to the right if Donald Trump becomes president. Now, I know this was the consensus because I believed it too. I told you guys that that's what I thought would happen. And there was no obvious reason why Donald Trump would allow the U.S. stock market to drop, let alone personally take actions to crash the market himself. But that's exactly what's happening right now. And to be honest, this got people's brains in a blender. Now here's President Trump talking over the weekend. It's all about his plan to get interest rates and energy down. Take a listen.
I've been saying, let's get interest rates down. Nobody ever gets rich when the interest rates are high because people can't borrow money. Interest rates are going down. You know what else is going down? What have I been trying to get down?
Oil.
Energy. Energy's going down. I'd love to see energy go down.
It's kind of crazy to hear him talk about that. Now, Chris Patel and Amit is Investing, they explain how this plan works. We got $7 trillion of debt. We need to pay it back in the next 6 months. That's a big bill, baby. If we don't pay it back, we'll have to refinance. And the Trump administration, they do not want to refinance that debt if rates are at 4% or higher. So what do we got to do? The 10-year yield, we got to get that thing down. At one point, it was at 4.8% this year, but we got to get it lower. And so how do you get it to come down? Well, markets, they need to be scared. They need to show a little weakness in growth. People got to believe that Doge is actually working and interest rates will slowly start to come down. And the way to do that is you create that fear and that uncertainty. You do it through things like tariffs. And so as you put on tariffs, you can see the slowdown in growth in the short term. You can get the bond market to start buying bonds as soon as possible because they're scared to touch stocks. And then, of course, that gives the Fed, the big bad Fed, the authority to bring lower rates down, which continues to bring the yield down as well. So, although every single talking head on television, every mainstream economist will tell you conventional wisdom says tariffs are inflationary and the 10-year should be spiking on more tariffs, it's actually going down because it's bringing so much uncertainty to equity markets and people, they're fearful, they're selling stocks and they're buying bonds. That's exactly what Trump wants to happen here. And in the short term, we are going to see the refinancing costs come down. Now, this isn't the easy way. It's actually the hard way to get interest rates down. The easy way, we already tried that one. The easy way would have been to have the Federal Reserve cut interest rates at the start of the year, but that didn't happen. In fact, many people have already forgotten, but go back to last year. Donald Trump was telling Jerome Powell, you gotta cut interest rates, cut interest rates, cut interest rates. But Powell was public in his defiance of Trump's request. So now Donald Trump and Scott Bessent, they're taking matters into their own hands. They are crashing asset prices in an attempt to force Jerome Powell to cut interest rates. Now here's the thing, we're gonna see who blinks first. It's a big game of chicken, baby. So don't believe me though, here's Donald Trump explicitly saying that you can't watch the stock market right now. Take a listen.
You said, look, we're going to have a disruption, but we're okay with that. Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that. You have to do what's right. What we're doing is we're building a tremendous foundation for the future. Tremendous foundation.
So there you go. The entire administration in the White House, they have their eyes on the 10-year Treasury yield. But even without Jerome Powell stepping up to the plate with his big bat and slashing interest rates, we've already seen the 10-year drop from 4.8% in January all the way down to 4.25% this weekend. That means we're heading in the right direction. And that is a good start. But we're going to need much more movement on interest rates if we want to have a profound impact on our refinancing costs. And refinancing costs coming down isn't just good for the US government. Lower interest rates also affect the consumer. The drop in interest rates since the start of the year, they've helped drop something like mortgage rates as well. Chris Patel points out that as interest rates decline, more buyers come out of the shadows. The sellers, they're willing to go ahead and sell because the buyers are willing to pay more. And that is what it's going to take to get the housing market to thaw. If you want housing transaction volume, you got to get interest rates down. But housing is not the only game in town either. Actually, there are a number of different assets that benefit from lower interest rates. Perplexity, that favorite AI search engine that I use all the time, it explains it best. The machine says that lower interest rates generally benefit American consumers by reducing borrowing costs. They make it cheaper to finance large purchases such as homes, cars, or education through loans and mortgages. And this can also increase disposable income, put more money back in Americans' pockets. And it encourages spending on big ticket items and it boosts economic activity. So, how many interest rate cuts can we expect in 2025? That's a big question. There's literally trillions of dollars being bet on this. Prediction market Cowsheet, they say that the market has increased its expected number of rate cuts. In fact, their prediction markets show that it now gives more than 75% odds of 2 or more rate cuts this year. More than 75% odds on 2 or more cuts. I like those odds. Cowsheet is also showing a 38% chance of a recession this year. Why is that important? If we get to a recession, interest rate cuts will become much more obvious. So, Donald Trump, Scott Bessent, Howard Lutnick, and the current administration, are they trying to pull down asset prices? Absolutely, 100%. They're telling you in every single interview they do. They're claiming to be focused on Main Street, not Wall Street. The big goal, get interest rates down, and that will lead to more economic activity thanks to access to cheap capital. Give the people cheap capital and they'll go and do things with it. Remember, this is not your grandfather's economy. It's not your grandfather's economic policy either. But there's tons of controversy over this strategy. Why? People hate new things, especially when they're told that these are big, bold bets coming from the other side of the political aisle. But if we end up with lower interest rates and we can somehow avoid a recession, then we're all gonna have to tip our cap to the current leadership team. I don't envy their position. Something new has to be done since we can't continue on the path we're on. Let's all hope this plan works. There's millions of Americans are depending on it, and if we actually can pull this off, millions of Americans, their lives will be better off for it. Whoa, buddy. Bitcoin's falling in price and everyone's freaking out. You can see it all over the internet. You can even see the fear in the eyes of the market if we take a look at the CoinMarketCap Fear and Greed Index. And right now, that index, it's flashing a big bright red sign. Extreme fear, baby. The measurement is showing a 17 on the scale. That's the lowest reading we have seen in years. The last time we saw a reading this low, it was during the pandemic, which had caused a flash crash in 2020. And it was also during FTX when it was failing in 2022. Those were epic bottoms, and I'm gonna bet that the current extreme fear one is an epic bottom right now too. But here's the thing, and this may surprise you. 1 year ago, the Fear and Greed Index was showing extreme greed with a reading of 92. So we went from 92 to 17 in 12 months. It's a big crash in excitement. But that's not the craziest part. Bitcoin is up approximately 20% during the same time frame. This is a perfect example of why you have to ignore the noise, why you have to stay focused on the long term. At the same time that the market went from excitement to bearish, Bitcoin's price went up 20%. Stop listening to everybody else. When everyone was excited, Bitcoin was still going higher. When everyone is scared right now, Bitcoin's likely going higher in the future too. The reason is that Bitcoin is a special asset. It is unlike anything we have previously seen. Don't take my word for it though. Take a listen to crypto czar David Sachs explain it from his perspective.
We do think Bitcoin is special, and I can get into the reasons
explain why. That's a great thing. Yeah.
Well,
explain
I mean, Bitcoin's the original cryptocurrency. It's the first one. It's the only one that doesn't have an issuer, right? It's very decentralized. It's, in crypto they call this the Immaculate Conception. We don't really know how it got here. We don't know who Satoshi is. It's almost mystical, you would say.
Yes.
It's the most valuable one. It has a $2 trillion market cap, and it's the most secure. It's never been hacked, right? So we're now, over 15 years into this journey. And
it
so
is a miracle it hasn't been compromised. I think we can all say that.
Well, I don't know if it's a miracle. I think it's exceptional design.
Sure.
And so I think what you could say is that it's been tested in a very robust way, and there's been every incentive to basically break the encryption. And it continues to chug along. And so I think the price has gone up as the protocol has gotten more acceptance.
A decentralized cryptocurrency with no issuer. That's impossible for anyone or any other asset to compete with. Satoshi Nakamoto invented the perfect solution and then unleashed it on the world. So who cares if the price goes up or down in the short term? Bitcoin helps those who can think years into the future. And so far, regardless of whether we've had extreme greed or extreme fear in the market, Bitcoin continues winning. And that's exactly what it was designed to do. Speaking of winning, you're probably told that the dinosaurs went extinct thousands of years ago. But if you looked at Wall Street over the last few decades, you could have found plenty of antiquated ideas like the stock markets being closed more hours per week than they're open. Think how crazy that is. That's absolutely ridiculous. We live in 2025 and the stock market is closed more hours than it's open each week. Now we live in this global world and every single human is persistently connected with an internet. And it's all thanks to the supercomputer in our pocket. Yet the stock market's open late and they shut down early. It just makes no sense. It's like we built the system for yesteryear and it's not prepared for the future. But thanks to the rise of Bitcoin, cryptocurrencies, and other assets that trade 24/7, stock market operators are working to change the situation. They don't want to get left behind. They want to future-proof their business. They want to make sure they're prepared for whatever comes down the world. A big part of running a large, centrally important company like a stock exchange is to always listen to your customer. And the customers have made it very clear. They want to trade 24/7. Regardless of the asset, they want access all the time. And so if the customer wants it, then the customer's going to get it. That's the whole idea of business. There's a new report from Catherine Doherty at Bloomberg explaining that NASDAQ, one of the two major exchanges in the United States, they have a new plan to allow investors to trade 24/7 on the exchange. Catherine writes that NASDAQ Inc. plans to offer 24-hour trading on its equities exchange. It's the latest venue seeking to capitalize on growing global demand for U.S. stocks. The second largest U.S. exchange operator plans to enable the extended trading 5 days a week, according to the NASDAQ president, Tal Cohen. It expects to start round-the-clock trading in the second half of 2026, next year, pending regulatory approval and alignment with the rest of the industry. And let me tell you this, the rest of the industry, they're aligned. They want to trade 24/7, and NASDAQ's going to make it happen. Now, I love this move personally. We should be celebrating the stock exchanges that are trying to make this happen. Again, they're thinking into the future. They're trying to service their customer. They realize the world is changing and they got to change along with it. I have long said that hours of operations for public market assets is akin to manipulation of asset prices. It isn't nefarious or malicious, but it is concerning if investors don't have access to financial markets, although they have access to information. In the last year, we saw multiple events happen, a tsunami of news, all occurring on Saturdays. Remember, the leading presidential candidate got shot in an assassination attempt. Iran shot 300 missiles at Israel, and Hamas brutally attacked and killed civilians on October 7th. All three of those events happened on Saturday, and in each of those situations, people were receiving market-moving information, but they couldn't act because the market was closed. It makes no sense. The world continues spinning, things continue operating on the weekend, and we still don't have access to the market. But thankfully, that's all going to change, and I fully expect 24/7 to become the default state of markets. It already is for Bitcoin and cryptocurrencies. It's going to happen to stocks too. Let people access their money and assets when they want, and you will have a return back to something that looks more like a free market. NASDAQ should be applauded for their efforts here. Now we just have to wait and see when the regulators give the plan a green light. Now that's it for today. I hope that you guys are enjoying the show. I am, and our whole team is enjoying putting it together. So we'll see you guys tomorrow from the
Wow. Yeah, a lot to dissect there, from stocks running 24/7 to is Trump grifting and is he crashing the market? What's up, Landy?
Hi. What's going on, guys?
Hey, Landy.
Is that Shiflett?
It is.
What's up, brother?
Hey, man. Our conversation from our Friday show was brought up during this stream.
Which one was that?
Giggy, you want to roll into that again?
Yeah,
we can revive it.
Yeah, we can keep going, keep it rolling. Yeah, for sure, dude.
What I mean, if you want to hear my thoughts on what Pomp has to say, I can also read the news just like him, and so can you guys. But that's how I feel about Pomp, and no offense to Pomp, but maybe I'm a little irritated with his vetting of his prior sponsors that he used to have, and how he led a lot of lambs to slaughter, unfortunately, and through obviously no fault of his own. Didn't get paid large sums of money in order to shill some of those things, but I'm just a puking frog on the internet. So what do I know?
You're not a fan of BlockFi?
Oh no! As a matter of fact, I'm not a fan of BlockFi. Weird. Never was.
I'm a lucky man. I had about 3,000 Gemini dollars on there collecting yield on BlockFi, and I got it all out after, I think it was when Luna collapsed. I was like, nah, I got the fuck out of everything at that point. So I just I dodged that bullet.
As Luna was falling apart, it's like the building is burning down in pieces. Well, I better withdraw this.
I have my BlockFi credit card. It's a souvenir now.
Yes, it definitely is a souvenir.
I still get
the first Bitcoin rewards credit card. Still holds that title.
Oh, I think I still have a card.
I'm still getting paperwork in the mail from the Celsius collapse.
God, all you guys, really? I never touched a single one. You know that whole saying that we have as Bitcoiners? Not your keys, not your coins.
Yeah, this is whenever I was first getting I just learned about what Bitcoin was whenever all that was going on. It was right before Terra Luna, and then Celsius was right after that. I got my stuff off of Celsius right on time, and they started talking about clawbacks and stuff. And I was like, "What the hell, dude? Seriously?" Yeah, not your keys, not your crypto guys.
I missed. I didn't get bit by the Mount Gox. I didn't get bit by Bitfinex, I didn't get bit there. I didn't get bit by any of these lenders. I didn't. It's because I'm such a curmudgeon when it comes to Bitcoin. Like, no, I ain't giving you my Bitcoin. Screw you guys. I'm going home. And like,
my wallet.
I just never like it was part of it was built into me from the very beginning because I was doing, some cybersecurity and financial stuff. So, it was from that aspect of it. I just never felt comfortable with it. Like, why would I'm literally transferring my coins to them, and they're my coins in name only at that point. And I never trusted institutions to begin with because, well, when you work for some of the institutions, you know not to trust them.
Yeah, dude. Well, I mean, some of these people don't know. Like, whenever you're flashing, like, high percentage yields on your assets and stuff, people get roped into that stuff. Not doing any type of like good solid research or any due diligence at all, really. As per my case, at least. So I got pretty lucky there.
Well, the advantage is that at some point we all do learn a pretty painful lesson. Mine happened to be with a centralized exchange going down when market conditions were volatile and taking me out of a position that I was very fond of at the time. And I revenge traded the ever loving shit out of it and got my coins back and then some, because I was so angry at myself that it was a lapse in judgment. I knew not to leave the position open. I figured that it was going to be a very volatile time that exchanges couldn't handle. And the biggest thing is when we're in a different world right now. You guys saw my post earlier. The exchange reserve balances are falling. Okay, they're falling rapidly. They've been falling rapidly. It's the same chart I've been showing for a while. And that also means when you have exchanges, the centralized exchanges that we use all the time, right? Often, let's say. I know that some of you might even still use some centralized exchanges, and that's fine. I do too. But I use a mix of CeFi and DeFi, but they're all getting their coins taken. Their coins are going away, guys. You'll see that just a little bit of an increase in exchange balance has a magnified effect to the downside there near the tail end, right where we are. See that how it went straight down and then popped up a little bit before going back down again? Because when you have an ever decreasing circulating supply in exchanges, it's much easier to move price with a very small amount of coins, right? Hence, the price is very high for Bitcoin, or was still very high, and it's still very high. It's just below $80,000, right? And where are the coins going is what everybody asks. And it's like, well, where do you think it's going? I mean, it's going to all the major institutions to sell back, to repackage and sell back to you, right? Something we talked about a little bit earlier. Thanks for coming through, by the way, everyone that could make it to the stack space earlier today, where even Dave had some issues getting in.
Dude, I was looking for it, and then like I was anticipating it, and then I saw Dave like post that he was having trouble, and I was like, well, okay.
Yeah.
Then, at the last moment, I saw that you guys were running it, and then it was over. So I was like, man, you guys were ripping and running for an hour, and I missed it. X is really bogged down today.
Yeah, it's not been fun. I couldn't even get my other account in there. It was telling me that I was not authorized. I'm like, I've never even seen that before. How are you not authorized to enter a space?
Same, dude. That's what I saw whenever I first tried to jump in, and then.
Well, the stream right now, Landy. I don't know if you noticed this, but the stream's not actually playing.
It's
like
not?
People actually can't watch it on X. It's playing on YouTube. It's actually like it's there on X, but it's like you can't actually watch it.
Yeah, it's been a doozy, all the way from this morning where when we were trying to do fine turn, this happened live. This attack on X happened live, and then persisted all the way through and through the day, through the behind the STX space with Dave and you and Staxy, and now persisting through the DeOrganized nightly. segment. I wonder, they were saying that the IP addresses were coming from Ukraine. I was wondering if you had any take on that. Can
Not surprised.
Elon see through people's VPNs and pinpoint this, or is this somebody like setting their VPNs to Ukraine, or?
Yeah, unless you're using something like Mulvad with multi-point in and out, like you all it's doing is changing your IP address, which can still be traced back to the origination network before it hits the VPN. There's tools and techniques and ways to do that. And, when you're a large organization in terms of, a powerful organization with connections all over the world, you can easily figure this out in-house, or you can even, if you need to, you can make some phone calls and, okay, help us trace this. If you don't have the resources in-house. But yeah, no, it's fairly simple. I will say that with the Ukraine stuff, I'm not surprised if it came from Ukraine. A lot of traffic. My bad.
Oh, you good, dude.
A lot of traffic tends to get routed through there. It used to get routed through there. They were known as kind of a hotspot. It's funny because it used to be known as like this corrupt country. I don't know if you've ever heard this before, but there was Russia, fairly corrupt in terms of the way that the things are ran politically, and then Ukraine, really corrupt in terms of the way things were ran. I don't know if anybody's ever heard this before. Pretty controversial topic.
Yeah, I think I recall.
Yeah, I tend to get a lot of Ukrainian flag accounts that come after me for saying that, but
oh no,
it's almost as if they have an agenda, or maybe they haven't read up on history.
Protect at all costs.
Yeah. But yeah, no, for that particular thing, I'm not a geopolitical expert. I'm just a chart guy. But
speaking of a chart, did you want to pull up your walk us through?
You want to see the chart?
Yeah.
It is a.
Do you?
It's quite it's a chart, all right.
But it's a chart for sure.
It's definitely doing exactly what I talked about on Friday, actually. So it's not that I have a crystal ball, but it is fairly simple to analyze this kind of stuff. And
Landy's gate ball is very well tuned, very fine tuned.
Yeah, I mean, look, anybody that's been following along with this style of analysis that we've been doing on Tuesdays, myself and Peace, with Learn TA with Landy, could have seen this coming from miles away. And I gave up kind of what was going to happen last week as well. What we saw was a run of the lower second standard deviation so far in today, and a run of the low. And I had mentioned on Friday, any closes below, 80, any closes below 85, we're looking 80 to 82. If that doesn't hold up, we're looking for at minimum a run to the $78,000 low and possibly lower. We did get the run of $78,000 on a swing so far. Let's get rid of some of this stuff. Right. And essentially what this amounts to is another retest of the lower second. So we've had a big compression on the daily here in this downtrend, expansion through some key support levels, and through the lower second standard deviation, indicating high volatility to the downside. We got some mean reversion back up, rejection, retest of the lower second, and then a retest and rejection of the basis here, and then another retest of that lower second, which I had noted on Friday was right around the low at 78. We got a nice swing through it. I mentioned, and I kind of maintain this, we could still see a swing through it and then a pop up again. But, it's a very high likelihood that we're going to head down here to 75. And you might notice that this is just a line floating in the middle of nowhere. Why is this even there? Well, that's because the weekly lower second standard deviation, which you're getting a little bit of a preview of my video that's going to be coming up here in about 10 minutes or so, that I'm going to start recording in about 10 minutes. But lower second standard deviation If price continues down, you'll see the weekly lower second right around $75,000. It's currently at 75,400. Because it is now kind of in between time frames, or the weekly candle is open, you will see the band slightly adjust. So this would be, another spike down towards this lower second. This would be the first time that Bitcoin has seen the lower second standard deviation since it kicked off the big move up, right? Last time it saw it, it was down here at about 52.5 and about 54, almost 55 on the close when it saw the lower second standard deviation of the Bollinger Bands. I do expect this to get tested should Bitcoin remain below $80,000 to $82,000. So if we do see $82,000 kind of reclaimed, things could pop back up. Then we look towards right around $85,000. If this candle turns green, we will see the lower first standard deviation on the monthly be around $85,000, which just so happens to line up with some of our horizontal support and resistance from the range above. And I would think 75 is in play right now. And even this bigger topside structure here from this actual high side structure, this isn't really a high on a close or a swing. You did get a nice swing up towards the prior high of the range there, but it's really about 68,000 to 73,835. I'd be looking for a retest in there somewhere. And there is some highs in here. We've got 72.77. We've got 72K. We've got another high in there at $70,000 even. So definitely in play at this point. And I guess a little bit of context. I've been saying this all day. Everybody's screaming bear market. 2021, we had a big old high put in here at $65,000, and we had a 55% dump off. Just prior to that, we had a 31% dump off coming into December into January before legging up to that 65. Then we saw a 55% dump off. Take care, peace. It's good to see you, brother. And then it wasn't until we saw the retest of the upper second again that we got another 55 or 52% dump off, and then went sideways in kind of a bear flag, and then dumped out into the bear market. That's not what we're seeing right now. So even if this was going to turn into a bearish long-term structure, we need to see price rise rapidly and make like lower highs. So I'm not very concerned about this right now. I know a lot of people are. Even if it did turn bearish, it's not bearish yet. And I'll show that just to you real quick here on the monthly. We beat this one to death, huh? There is a monthly high in. It's a higher high. Nothing crazy about this. This structure is pretty simple. We have a lower high to higher low structure in here. We have a higher high, higher low, higher high now. I do not expect price to... The only way that this would turn bearish right now is if we got to close below $49,000. Okay, that would be a lower low, right? Or a swing below there would put it on lower lows, right? Another thing that would look bearish is closes below $59,000. Because then we start to look for, okay, even though it didn't make a lower low relative to 49, could it possibly make a lower high? Those are all just possibilities. But right now, this is just an uptrend, and it's bullish. And in fact, wherever it does put in its next higher low, whether it's here, lower, doesn't really matter. That's when we want to pay very close attention, right? Because then we have to pay attention to the all-time high now at 109,360. Because that higher low, we want to see then push up to make a new higher high. And we, more importantly, want to see it close above, not like what we saw last cycle, which is what I was warning about last cycle, is we saw this nice higher low structure, right? This is a beautiful higher low as it related to the last higher low at 9,800, almost $10,000. Well, then we got a higher low at 28.8. But the danger is we had expansion, full on expansion. We got under the upper first here and then retested that expansive posture, without closing above $65,000 and spiked the upper second near perfectly twice there. That was the danger. Didn't close above 65. And that's why I was bearish when price got up to $69,000. I was bullish on 28, bearish on 69. And everybody loves 69, so they were mad.
Oh, that's exactly what it was. It was the psychological level of 69, the legendary, very legendary, mystic level. 69.
Yes, I have some videos. I'm gonna pull them up at some point. They're on the YouTube, I believe, because I used to just live stream for hours and talk with people. And my level was $68,000 to $70,000 was the level that I was looking for to get hit, because that's, roughly where within margin of error of that upper second standard deviation on the monthly, which is, what I was looking for at that point. There was another confluent factor there that had me looking for the actual end of the bull market there, even before the structure change. And that was because we were going into a compression, and we had already hit full expansion. So let me go here real quick. So we had full on expansion already here. And then when we were spiking back up, we had some criteria to meet. So this was $65,000. We had very high volatility, and then we got under the moving average. So we were going into a compression, right? And we were still going into that compression as we made the new all-time high. So it was very easy to say, okay, if it does not close above $65,000 and the upper second standard deviation, this is done. We have to wait, we have to wait for this to actually go into its compression again to get that re-expansion. I will tell you, we're in a compression still right now. And we are not hitting full expansion of price volatility. This is literally a sideways and up grind. The last time that we saw a sideways and up grind in markets like this with an asset that was fairly newly established as an asset class in traditional markets was gold.
Oh, so it's looking very similar to gold. Is there a gold BTC chart?
Yeah, but that's not going to be relevant right now. I mean, we can always play the gold BTC chart in terms of pairs. You could just do, you could say like, what is, are they correlated or uncorrelated? Let's see, which gold ETF am I using? It's currencies and bonds, dollar dumping out, by the way. So everything that you're seeing in markets right now is silly. It's upside down world right now.
Yeah, dollar dumping, TradFi dumping, Bitcoin dump, everything's dumping.
Yep, even gold is dumping. We're all just taking a dump. CFD's on gold, so gold is the ticker. It's easier just to do this from here. Let's see, and we can go with. We'll make it orange because it is going to replace gold as a treasury reserve asset, because we don't even really measure our gold as a treasury reserve asset. Let's go ahead and go to the monthly here. And this is the gold chart. We have when Bitcoin and gold, kind of run together, they are correlated. And we had Bitcoin doesn't even really show up, but was ripping to the upside with gold in the early days. Then we had when I was getting in, where Bitcoin was still legging up while gold was coming down. Started to get a little bit of a correlation in the run in 2017, drawdown into the bear market into 2019, and then it ripped up in 2020 with gold. We saw that gold went into its bear market. Bitcoin went much deeper, and then they both just ripped to the upside. But realistically, what we're talking about here is this period of time back here, where we had on the monthly time frame, gold was just bouncing in between the upper first and upper second. Big correction, and kept going. This is what I'm
envisioning for Bitcoin.
Eventually, it's not going to look exactly like it, but it's likely going to rhyme on longer term time frames. And what's funny is we had 200. Let's see, actually have this somewhere. Where did I put this? It was something like 6 years. Then we had 2 years basically of a break, which was sideways and down. Big correction in the gold market for about 2 years before hitting bottom here. So we had a little less than 2 years, 22 months. So we had 79 months of up, sideways, and up. We had a little bit more than, this is a little bit off here. We had about 20 months of bear, where it did break structure with a lower low, lower high, higher low, and then rip to the upside for another 40 months. Before putting in a major high in 1980. And then it went into a prolonged bearish period for 336 months, 10,227 days before resolving to the upside. Right around, guess when? 06 is when it really started to get towards its prior highs and threaten like it was going to go for the prior all-time high. It did so, you guessed it, in 08 into our August into November, like summer, drawdown into November of 2008, and then it ripped to the upside to brand new highs and started to get back onto the path of going into a big correction and then a big bull. The big cup and handle is what you'll see a lot of people call it.
Yeah, definitely. Very rounded cup there and has a handle. I call it a handle.
Yeah, that was it. It wasn't as steep as people wanted, but you're still getting the same result. For those that are cup and handle traders, pattern traders. Patterns have a very low hit rate, so I don't really play patterns. You don't hear me talk about them much. But when they're relevant, they're relevant.
Whenever you can clearly see it's there, after the fact in hindsight.
Yeah. Here's another fun one. Let's go ahead and throw the pi cycle top indicator on here.
Ooh, cool.
Pi cycle top has been pretty accurate. Pi cycle high did pick basically right around the high on a closing basis at $65,000, even with the correction for Bitcoin here. Nearly to the day. It did market after the fact. I'm in the same month with my vertical bars here. Pi cycle low was close, but we got the extra push down, which wasn't very much. So it caught the majority of, if you were in at 17,500, I don't think you'd be crying right now, right?
Right.
And then you'll notice that we didn't get it firing off at the new all-time high. We are now below the short EMA. This is, a corrective structure on the daily, right? If you're to look at this on the weekly, it is still just trying to work itself out. It's not extended. It's like right in the perfect position. It's one, I'm telling you, I've been saying this for a long time. From this part of our cycle here, we are loading. From 2017 to now, we are in one giant accumulation, sideways and up accumulation structure. And because of the limited supply, it will result in a volatile move on longer term timeframes that will take years to the upside. So that's where we would be looking at something like what could, possibly what happened with gold, where we're getting just years and years and years of grinding sideways and up. It's very possible. Very, very possible. Also, I would love it if that happened.
We have some fun. Get a yacht party going on with all the guys, and
I mean, I would love to, but just so you know, it ain't going to be my yacht. You can use somebody else's yacht because
Yeah, dude. We'll use
shit's
Jack's yacht.
expensive, bro.
Yeah, we'll use Jack's yacht. It's all right. Thanks, Jack. Be a good old time. Sideways and up only. Let's go.
Yeah, and it's we live in an interesting time where the fundamentals of our economy are being changed, right? Trump is changing the underlying fundamentals of the way the economic system works and the governmental system here in the United States works. And I've said this a few times on a few different shows. What is occurring now, a lot of people are calling it a bear market, mainly because Jamie Dimon and Warren Buffett, are sitting on the sidelines, right? Well, why are Jamie Dimon and Warren Buffett and many others sitting on the sidelines now? Because traditional markets were up so much, it only makes sense to take profit, first off, even if it's just a correction for a quarter or maybe 2 quarters, right? Or maybe less, right? You're getting a profit take, but like Berkshire Hathaway did no buybacks on their shares, and Diamond is going to be taking profit until I believe he said like August or something, which is funny because August would be right around the time we would be looking for the fourth quarter pump in markets and in Bitcoin and everything else. Not that he's going to be the one behind that, but why are they doing what they're doing? Are they so bearish that they think that the stock market is absolutely going to crash and it's a recession coming and all that?
No, they're
well,
they
might talk that way, but I said this on, I think, David Gokhstein's morning show to somebody that was not. They feel like it's the bear market. We're already here, right? Said structurally, no, but sentiment-wise, yeah, right. The biggest thing here is that what needs to be understood is because Trump is changing the way business is done in the United States from a governmental level, from the way that we trade around the world, to what his plans are, what they're doing with cutting spending within the government, waste, and fraud and abuse, to modifying where money goes in terms of prioritization with spending, and possibly even taking taxes, taking an axe to a lot of taxes, right? He's fundamentally changing the environment from the status quo in that by strengthening Main Street, meaning retail, meaning you, I, and everyone else, strengthening our buying power, well, then the bigger players cannot easily predict where the money's going to flow. When it's all just them getting kickbacks from the government and this big circle jerk of the rich get richer from the government specifically, we can easily track capitalization of those inflows and where they're going to flow to, right? And when you give that money to retail, we could spend it anywhere we want, and they then need to wait to see where we are going to spend our new money. But it also takes time to get the American people their money. It's going to take a little bit of time to lower those energy costs before those plants that are being fired up, before we actually feel it, right? For refining oil, right? Because there is a lot of plants coming back online. There's plants being built. There's new deals being made, right? It takes, there's a lot of business that is business deals coming into the United States as well for investment. And as the policy is implemented, it takes a little bit of time for that to be to actually have its effect, even after it's fully implemented. So what the big money is doing is they're parking on the sideline cash, and they're filling up their cash positions. And they're not doing that because they want to buy the highs. They're doing that because they want to buy the lows, and they want to buy where retail is now going to go. It's not as easy to predict where the money's going to flow like it was under Biden, where it's literally anything the administration wanted to do was being run by larger corporations and people getting their palms greased left and right. It was a giant circle jerk in Washington, and everybody in the corporate sector was in on it, right? So they could easily say this is where the ride's going, right?
Yep. Coming to break it up and change the game, and put some money in our, maybe we have some I heard some stimmies might come into play. A Doge stimmy would be nice.
I would say no.
No.
Stimmies are not good. They're temporary money that will be extracted by the bigger players in the market. We saw it in 2020 into 2021, right? All you need to do is go back and look at 2020 into 2021. You know why we got this structure here and this structure here? Because this entire time, stimulus money was coming in, right? Through the end of 2020 into 2021, there was another stimmy check. And then after that got delivered, in shortly after January, March, what happened? We topped out and then washed all retail out of the market. We had an institutional run. And then once retail got all their money eaten up, they got their money eaten up again in 2021. And then they dumped the market out on them. And after they were all invested, we had Celsius and BlockFi, and then we had the FTX, and now retail's gone. And we took all your stimulus money. Have fun. You don't want that. You don't want stimulus. I'm telling you right now, you don't want $5,000 per person in stimulus. That is a terrible idea. It's going to be wasted and immediately gobbled up by all of the various evil corporate overlords that people love to hate on.
They're just going to sell. They're just going to sell on us and push the price down. And
yeah, because what is everybody waiting for? They're waiting. You know what they'll do is right before the checks come in, everything will start to turn around and run up, so that when you start buying in with your stimmy checks, then it'll run back down. Oh, I need to buy a little bit more. It's the dip. And then it'll run, and then they'll dump it out some more. It's the same thing they did in 2021 with each stimmy. Like,
what's the likelihood of that happening all over again?
Absolutely 100% the highest likelihood. You don't want stimulus. Stimulus is temporary. Just fix the fucking problems, right? Fix the fucking problems that are going to enrich the American people. Yeah. Don't just pay us off, because if you pay us off, that money's going to be gone in a heartbeat.
So it would look just like history repeating itself again. Stimmy checks. What's the possibility? Like what percentage do you think that they go with stimmy versus like just fixing the issue?
I don't think that if they're going to go with giving people back their hard-earned taxpayer dollars, then you just give it all back, or you don't give it back at all, and you take care of the fucking debt, and you make our government more efficient, and you get rid of a lot of the waste and fraud, and you start spending the money in ways that will enrich the American people, because it'll have a much longer term effect on the American people than any kind of $5,000 or more kind of check being sent out to people.
That I've seen like typed out is it just doesn't make sense what the government was spending money on. Some of the headlines. Yeah,
it's bullshit.
It's all bullshit, dude. So I'm glad that he's like cleaning it up, and I hope that he does intend to act in our best interest and empowering us. You're right. The stimmies.
I hate that they floated that idea. They should have never floated that idea, because now they're going to be in a politically shit position
if they don't
do it right. And then you either go big or go home, and the market monsters will eat that money right out of everybody's pockets. So I just don't see it as a vector for any kind of sustained market movements. The market will move to extract that money from people's pockets. All you got to do is fix the fucking underlying problems, and every American will be richer. Every community will improve. And then start rolling that from a federal level with more. You get rid of the fucking IRS. And we don't need that particular tax side of things. That would do more than any stimulus check they could send.
I saw something about they were floating around the idea of a CRS, like a different way to tax crypto related stuff. So
Yeah, they should take a CRS and shove it right up their ass. Because good luck.
Thank you.
Nothing they do for that kind of taxing crypto is going to be good. In fact, what they did by classifying meme coins as collectibles is just downright dirty.
Oh,
And I
dude,
get why.
it's. I mean, what is it, like 44% or something like that you pay?
You're paying either short term or long term cap gains on it.
Mm-hmm.
Yeah, which can be incredibly high. It depends on a few different factors, but by calling it a collectible, which I understand why, because meme coins have no utility, right? So, and you can't really say they're a security because they're not really a product that is a security with. They're right on the edge. They're more of a collectible. I mean, they're more like they're cultural and culturally relevant tokenization of something that's culturally relevant, right? So it's more like akin to a baseball or football cards or stuff like that.
We need to see some change around how these things are taxed, if at all.
Yeah, get rid of the fucking collectibles freaking cap gains tax. It's bullshit.
Yep.
That is get rid of the IRS just in general. That's bullshit. It's in my opinion 100% unlawful and illegal. So but pay your taxes or you're going to go to jail. It is a real thing, right?
Yep.
I don't think that I think that there's better ways to do it. And hopefully they come to those conclusions as well. I mean, it's Trump's own inner circle are the ones who have floated getting rid of the IRS, including Trump himself. So this is not new, right? This goes back a long time with him and the IRS, all the way back to the 80s, where he's mentioned that, I don't think the IRS should even be here. We shouldn't even have the IRS. But I don't think he can commit to actually getting rid of the IRS until he sees the revenue from tariffs coming in. And that's what will likely be the deciding factor of getting rid of the IRS.
I guess we'll see, within the next few months. He doesn't have a whole lot of time in office, so he's got to be, kicking out stuff constantly, new legislation, new ways to approach it. And he's done that since he's gotten in office. There's a whole new stack of things that he signed into, that he signed and got moving. So as long as he keeps up the pace, I don't see it. I think. Do you think he accomplishes everything he sets out to do?
I think he's gonna. I think that he's going to be successful in what his administration is doing from the executive side. Where I think the challenges lie is with getting everything codified in law. So getting it through the House and the Senate to codify these things in law. So that is where I think that the challenge lies.
We have a Republican president and House right now, right? So
yeah, I mean, some of those Republicans are rhinos still. That's what concerns me.
So they might just drag it out and then try to make it longer than his term until it gets passed into law and drag it out that way, stall him out.
Well, he has a 2-year timetable right now, right? I mean, he's literally declared that he wants to have a giant party in 2027, right? He's calling it the golden age for a reason, right? And why would he want to have a giant party in 2027? Because we have midterms, right? So 2025 to 2026, when the campaign comes around, when we start campaigning again for, House seats and Senate seats, and we have other races going on locally, he wants to get these things done in the first couple of quarters here, first, second quarter into third, fourth quarter of this year. so that in 2026 they can hit the ground running, start filling out the rest of their agenda with people that they want in the administration, and then they want to throw a party coming into 2027, right? Or something like that, 2027 time frame. So
I guess we'll see.
They have a condensed timetable.
Yeah, I mean, I guess we'll see. You know what comes within within his reach and what he executes on. You know, so I see him doing good things regardless, and kind to inspire people to make the big decisions for drastic change to happen. So
yeah,
we are around that hour mark, Landy.
Yep.
I wanted to thank you for coming through and kind of going through the charts for us, and giving us your take on what's going on. Did you have any final thoughts that you wanted to throw out there, or anything that you would like the crowd to know?
Yeah, you do not own enough Bitcoin.
What's some Bitcoin, guys?
Even as Bitcoin continues, to test lows and maybe even lower, right? Understand that is opportunity. Remember when before it broke out to $100,000, everyone was kind of like, oh, it's going to knock around the range, and then it ripped through it to the upside. Then everybody's, oh, I should have bought more. Well, you're going to be getting your chance here. Either this is your chance or lower is going to be your chance. So you got to plan accordingly. Understand that you don't own enough Bitcoin. The United States government is literally putting it in their treasury. Yes, that needs to be codified in law so that it just can't be written away with the stroke of a pen in the future. But it is an asset that is highly desirable. And all you got to do is look at big states like Texas that want to accumulate $500 billion worth, which is insane. So,
right. Yeah, get some more Bitcoin. You're underexposed. Big things are coming. Thank you, Landy. I appreciate you, brother. And I hope you have a blessed rest of your day. Looking forward to your update coming out here shortly. And if you guys are not, be sure to follow Crypto Landy on X. Right on, dude. Have a blessed night, Landy.
Take care, GP. Thanks, brother.
And this has been another awesome episode of DeOrganized Nightly, where we get your favorite GigaBrain astronaut scholars in the same room and have a dope conversation and kicked out high frequency vibes. I am your boy GP with DeOrganized Media. I will see you again tomorrow. Peace.